Good morning, traders. This is Michael coming to you from GammaEdge on Wednesday, October 4th. We're going to do our pre-market morning strategy session and morning briefing. SPX Commentary has been posted in the SPX PBI BMO channel. Make sure you check that out. We'll go ahead and jump right into it with the SPX PM settled.
Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today.
SPX PM settled. Quick look here. We draw our eyes to the spot price, which is the yellow bar across here, and then the next area you want to look for is the transition area, which is wide and loose today, 42.55 all the way up to 42.85. We are still put dominated, negative gamma environment. Above and below spot price, we are dominated by puts in the money and out of the money with all expiries turned on here. We've added a new feature here with the expected move, 0.52%. Now we've added the actual points, so make sure you check that out. This widget will continue to evolve as we continue to expand and update the web app for our members. And then if you have any suggestions, we'd be happy to entertain those, but we'll continue to evolve the web app to add more data. Top, spot, and bottom has also been added here, so make sure you check those out. 4,200, the downside is extremely important. 2.7 billion or 2.7 million negative net delta there, net GEX. Total OI there. Obviously, it's just sticking out significant there, as we anticipated yesterday. If we were spending time below 42.50 and then 42.25, we would anticipate some move down towards 4,200. Pre-market SPY has gone down to 420, kind of where we opened, and now we're seeing a decent bounce to the upside. So anticipation today would be 4,200 would be the cap to the downside. On 0DT, we'll show that in just a minute. We're seeing 41.80. The negative net deltas drop off pretty significantly, and we actually see some in-the-money puts down there. So takeaway from this is we are still put dominated above and below spot price, so nothing bullish looking here, but 4,200 would be a significant level to the downside that we would anticipate to hold. We'd need a significant dealer change and absorption to get through that 4,200 on the PM settled, and then we'll look at the combo complex. 0DT, just as we spoke about, we have a narrow transition, 42.40 to 42.60 above. 4,200 again, significant on the 0DT time frame. Anything below 4,200, we're not anticipating much push lower unless we see specific targeting on the vol-u/vol-d command. We actually have some in-the-money puts, even though they are small, or sorry, in-the-money calls, even though they are small in the overall total OI, but we have we do have some calls below us, and then they drop off the puts. So absent any targeting below us, we anticipate 4,200 to be the downside. Getting to the upside will be a little bit slower and more difficult. Obviously, we need to retake that 42.40, which would be in trans level, and then we'd actually see some stalling probably into the 42.75, 42.80 level overhead if we got up to that level. So we'll go ahead and continue with the plus one DTE. Plus one DTE, again, wide and loose transition, as we've seen kind of a theme throughout. 4,200, the downside is important. We actually see some calls here at 42.15, then 42.20. Is right below spot price there. Again, moving to the upside will be difficult unless we see some mechanical closing and targeting of out of the money calls and speculation. We see the puts drop off pretty significantly as we get down below that 41.80. That's kind of where we were looking at on the 0DT and plus one DT. So make sure you're understanding that pushing to the downside will probably be difficult, and we don't anticipate much below 41.80 if we even did see that today. Balance of the week still bearish. In the money, now the money put dominated, negative gamma environment. Transition gets a little bit more narrow, 42.55 to 42.60. Again, 4,200 sticking out pretty significantly all the way into Friday, so make sure we understand where we're at in the overall complex. So again, we would look for 4,200 to be the low, and then transition up to 42.55. A little more difficult to push up above that into that 42.80 level. Here is the combo complex. Again, 4,200 sticks out pretty significantly. Really easy to draw your eye to that. 6 million net delta there. Net GEX 47,000. Almost 400,000 contracts there. To the upside, we have 4,300. Obviously, that same range we've been ping-ponging back and forth for the past kind of weeks to months. So again, that would be that range we'd be looking at. Again, wide and loose transition on all expiries for the combo complex. So really that 42.60 again across all expiries comes into important play there. Significant in the money puts above us here, starting at 42.70 all the way up, and then we have that 42.50 there which we need to get above and stay above, and then start traversing into the transition level. So takeaway, obviously 4,200 the downside, need to get above transition here. 4,250 will probably be a stumbling block to the upside, and then really not seeing likely to push any higher than 4,280 unless we see a significant change in structure, out of the money call speculation, and then mechanical closing of these in the money puts. Here's the landscape view, obviously sticking out pretty well. Our call speculation to the upside has dropped significantly as we've moved down to the downside. We would like to see that start to pick up if we're going to have any meaningful bounce back to the upside. 4,200 here, very, very significant, and spot price got very close to that yesterday. So if we get down to there again, that's going to be an important level, obviously, in the market to see how we react around those levels. Takeaway on tick, again, yesterday, increased institutional selling, even more than the previous day. New lows actually hit a new high again at 1,354. So again, if we want to see any upward movement in the market, any sustainable upward movement, we need to see tick start retaking the first moving averages, and then seeing some consolidation and crossing above. Again, red below cyan on the market model, a significant negative slope there on the tick US. Tick ARCX, again, negative slope to the downside, railroad track down, red below cyan, still negative slope in the overall market. So this will take multiple days to recover and fix. We could have a one-day sort of type trigger where we flatten out on the moving averages and the bolded CT starts crossing above the moving averages. This would provide us a trigger day in their overall downward ribbon complex. So we'll watch how that plays out today. Again, if you're even thinking about going long or looking to close some short positions, I encourage you to be watching the tick, understand where we're at in the overall structure of the market, and then looking for the tick to just cross above these moving averages. Again, we've had multiple crosses and then failures. So again, just a pure cross above is highly prone to failure within the overall downtrend in the market. So make sure you're understanding that and where you're at, that even though we do cross back up, you may not want to close your short positions. You may just want to reduce some exposure and then see how it plays out, as it's highly prone to failure. So we'll go ahead and look at some pre-market price action. Pre-market price action, 420 we touched. I spoke about this yesterday. If you are a technical analysis trader on any sort of time frame, the 200 SMA basically was at 419. 420 is a very significant, important level on SPY, and then we have 4,200 on SPX. So I'm really going to be watching how we play out today if we get down here on SPY. So we did touch 420 pre-market, and I think the low here was 420.03, and then we've bounced back up to 423. So really this is going to be an important area for me to watch today. To continue with short positions, possibly add to short positions if we see more weakness below 420, which I really wouldn't anticipate unless we see a significant amount of targeting. Qs look like they started to do some sort of pre-market bounce. Still kind of weak. Again, all the way down to that 353, we just barely undercut the low of the previous day, so we'll watch how that acts. Negative trends is 352 and negative GEX is 350. So heading into today, obviously 4,200 will be significant, 4,225 getting above and staying, then we can move up towards that 4,250 level, and the top side I'd be looking for is around 4,280, 4,275 to 4,280 if we got a significant move back to the upside. So hopefully that helps. Let's make it a great day. If anybody needs anything, let us know. I'll be in the Discord in just a few minutes. Thanks.